Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to dive in and take a look at a popular retailer that has been rewarding dividend investors for about 18 years. The dividend growth of this company the last 10 years has been 13% per year. 10-year performance of this stock is about 416. So if you invested on this company 10 years ago, you would have been up 416%. So with that said, please remember that this is not financial advice. I'm not a financial advisor. With that said, let's take a look and see if this is a stock for you to add to your dividend portfolio. So the company that I'm talking about is Costco. The ticker symbol is COST. For those of you that are not familiar with Costco, it is a company that engages in warehouse retailing. This company offers a lot, like dry groceries, hardware, automotive care products, pretty much you name it. I usually love shopping in this place because you pretty much get anything. The samples are also awesome, so definitely if you haven't had a chance, go check it out. It is definitely one of my places to go when I need to go buy some stuff. So let's take a look at bar chart. Based on their technical analysis and their opinion, they rate it as a strong buy. And then you can also see right here some of the recommendations. 24 analysis, 5 holds, 3 moderate buy, and then 16 strong buy. You can see right here, looking down at some of the price performance over the 52 weeks, it's been up about 8%. 3 months, it's been up 5%, and then for the whole month, it's up 3%. And then if you're wondering some of the key points of it, so you could see currently at the time of this video is 523. You got your support levels here, first, second, and third, and then you got your resistance point here. So good entry points here if you want to just focus on where you want to go in terms of getting in, if this is the stock that you want to invest on. As always, you can see for the past 3 months it's been moderate buy, and then it's based on pretty good amount of analysis. You got 24, 26, 25, so it's pretty much moderate buy a couple months ago, and then you got strong buy and strong buy. Now if we go to CNN Business, based on their forecast, they rated it as a high of 610, and then a medium of 550, and then the low of 475. And then their recommendation is about 20 buys and 12 holds and 1 underperform, and then you got your 4 outperform. Now if we go to Seeking Alpha, again, like I said, 10-year performance, you would have been up 416. Even if you invested only like 5 years ago, you would have been up 155. And then for the year, you can see it's only up 8%. Year to date, it's up 15%. Now if we go to NASDAQ, based on their analysis, they rated a strong buy. You got about 28 of them. And then if you look at who are the ones that are recommended, these ones, companies like Citibank, you got JP Morgan, you got UBS, Wells Fargo over here. So pretty good firms that have recommended it a strong buy. Now if we go to NASDAQ again, looking at the dividend history, you can see the dividend yield is about 0.78, and then you got your PE ratio of 38. Annual dividend is about $4. And then if you look closer, you can see, even from the very beginning, you can see how it started out small, and then eventually you can see getting increases, and then sometimes you get your special dividend. So they issue a special dividend. So you can see right here on 12/1/2020, they did a $10 special dividend right there, and then you got your normal stuff. So now if we go to Simply a Safe Dividend, based on their dividend safety score, they rated as 99, which is safe. The market cap is about 232 billion. Now looking down at the key metrics, you can see payout ratio is 27, forward payout ratio is again 27, which is low. During the recession, they've increased it, their dividend. And then looking at the dividend growth, again, last 10 years, 13%. Last 5 years is still pretty good, about 5%, 12%, and then the latest is 13%. And then again, 18 years of dividend consecutive increases, as you can see from here, and then 18 years without a reduction. And then if you're interested, when are you going to get paid? Quarterly in the months of February, May, August, and November. Your annual payout will be $4 per share, and then your ex-dividend date has passed, so the next one would probably be in August, and then you get your timelines. It's reasonably valued based on Simply Safe dividend. 52-week range, it's getting closer to the high right here. PE ratio is a little bit higher than the consumer staples, as you can see. And then if you look closely, you can see other stats in here. Return on investment capital, and then return on equity. Now if we go again to Stock Rover, based on their analysis, they rated also as a buy, 16 strong buy, 3 buys, and 0 sells. And then you can see right here. Now if we go closer to, again, comparing with the industry, so you can see Costco against the S&P 500 versus the industry. As you can see, 3-year return is better than the S&P 500, as well as the 5-year return. You can see 164 versus the S&P 500 of 73. Now if we swing to alpha spread, and here's some more of the intrinsic value. Based on their evaluation, they figure it is overvalued. And then you get your fundamentals over here. The revenue, as you can see here, net income, operation cash flow, free cash flow, and then you got your balance sheet right here. So you can see the assets is 66, and then the liability is about 43. And then you got your other ones, cash, short, and investments. You got that. Now if we go to tip ranks, based on their analysis, they rate it as strong buy. You got 12 buys, 4 holds, and then they feel that it's a 5% upside with the high of 635, average of 551, and then the low of 475. Now if we go over here to stock analysis, you can see hedge funds have decreased their shares based on they're rated as an 8. Insider transactions have sold their shares as well. Now looking at Webull, based on 40 of their analysis, they rated as a buy. 42 cents it's a buy, and then you got your strong buy, a hold. And then the analysis is also pretty much the same with 635, 547, and then you got your low of 465. Yeah, so that's about it. Based on what I see, I love Costco. I think it is a solid company to invest on. I would wait for a dip though. It is kind of expensive right now, so I would wait for a dip to see if you can get it a little bit cheaper when it does come down. So in my opinion, I would wait for it. Just put it on the watch list if you want to have an entry point on there, and then start slowly increasing it, and that's what I would do. But definitely a solid company to invest on. I'm pretty long on this company. I have shares in my private portfolio on this one. So with that said, thank you so much for watching, guys. Hope you liked this video. Do me a favor, hit the like button as well, and then if you have any chance, check out my other videos as well. Thank you so much, guys. Stay cool, keep investing, and I'll catch you guys in the next video. Right, take care. Aloha.